Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 7th of January. Now, welcome back to all traders after the Christmas New Year break. We're now starting to really look to roll out the extensive side of our trading program and hopefully get everyone making some more money. All right, now, what we're looking for is more consistent markets in 2019. And just at the moment, for those traders who were sort of banging away through that Christmas New Year's break, you've noticed the massive sort of glitch in the market here. I've actually circled some of the wrong ones, but you'll see some of these events which have really sort of thrown a spanner in the works now. It's one of those situations that you get when you do have, you are trading through a period where there's a lack of liquidity in the market. Now, the dollar yen was the culprit. It was put down. I mean, Apple shares dropped after their forecasts were reduced, and that was sort of a bit of the glitch. But this is, I'd say, part of the algos out there, no liquidity in the market, and that's where we saw everything a little bit skew-if. So when you come back and look at the charts as they are, and you're trying to piece it together, now, one of the good questions I've had out of quite a few traders is, what do we do with all these erratic lows, from all these big moves, like the Aussie in particular, dollar yen, obviously the big spike down in sterling. I mean, it was sort of across the board. Less erratic was euro, but with these moves, you've got to factor these into your trend lines, right? That's the first thing. It's the market. You can't just say, well, that was one of those events. Traders at the banks will look at those. But looking at all these charts, I mean, you're just seeing the same thing across the board. A bit of a glitch down. Obviously, the non-farm payrolls, really strong payroll result. The unemployment rate was a little bit weaker last Friday. The main news out of everything has been Powell's comments last Friday about, the Fed just sort of sitting on the sidelines for the moment. Now, that was already the plan. So that's why I think the US dollar hasn't gone far. But the glitch, you can tell it's a bit of a glitch. The only thing that isn't a glitch is dollar CAD, right? Oil has bounced back to $48. We have Powell's comments mainly, slightly stronger Canadian employment numbers, and you see dollar CAD moving to the downside with the stronger CAD. Now, you look at these charts, right? It's a bit of a dog's breakfast to start and this is where I'm starting the year, off. So what I look for is, if that's the case, I always come back and look at the daily charts. So I've got a selection here of the major pairs here on the dailies, and what I'm looking for is what's really happening behind the scenes. As you can see with euro, it's just trading sideways. Sterling, well, there's your glitch. Okay, you get that pop down to 124.40, but it's still, it is tracking downwards, but the last, through December, pretty much sideways. The Aussie, since, third quarter, it's been trading around 70 to sort of 74 or 73.50 mainly. That little glitch blew out a lot of stops, but it's back in the range again. And that's the same pretty much for the Kiwi there as well. Dollar yen, obviously the one pair that has sort of moved lower, but it has bounced back into the range. Dollar Swiss, this is a really muted move. You can see this is what the dollar is really doing. It's not doing a lot. It's just dribbling lower, but not with a huge amount of emphasis. Dollar CAD, the standout with oil rallying, but still within that sort of current uptrend. It's at a key level at the moment, and we need more information to really dig into that one. And here's the dollar index itself. As you can see, it hasn't really done a hell of a lot. So when you're looking at the currencies and you're looking at the technicals and looking to get into what's going on, there's not a hell of a lot to really focus on at the moment. You need to give the currencies a little bit of time to digest what Powell said last Friday. Now, as I said, this is the new plan, which was always do these interest rate hikes, take the foot off the pedal, and we'll react to what comes out. So I don't see that being a new event for the Fed. I know the media has sort of tried to play it up, but that's not exactly what I can see at this point. Now, if I just come back to just looking at the rest of the markets, all right, what you're trying to do is piece together what's going on around the place. Now, I'll just take you to the news first. And what you'll see here is a situation. Let me just move a couple of things out of the way. With the general news out there at the moment, the key thing is obviously the Fed is the most important event in the market. So what Powell's speech, it is important, and I'll show you the dollar index chart again on a bigger time frame. It really isn't doing anything, and this is because the Fed hasn't. This isn't a new structure. They always mention exactly what they were going to do. The Aussie and Kiwi, right? 2.5-week highs. Now, no big deal. It's not like it's a yearly high. And the main thing is, if you look down the bottom here, yuan climbs cautiously on hopes for US-China trade deal. It's also going to be on the news wires up here as well. Basically, I think Trump and China, or Kim Jong-un, or whoever's run, actually he's in North Korea, the whole plan is to wait until March to sort of come up with a deal. Now, that's sort of a very positive aspect to the start of the year, and that's why, you know, when we come back and you look at the overall equity markets, exactly why they have been rallying. So, you know, that knee-jerk reaction, if you got caught up in that, well, that's a bit of a shame. But, you know, for a professional trader, you're not really trading through, I would say, Christmas till at least after the first week of the new year, which is right now. This is when the markets become back to full liquidity. And what we're seeing here is, you know, a sea of green, right? This is really good. Equity markets bouncing across the board. I mean, up 3%, 4% for some equity indices. This is really strong, obviously, coming back to the Chinese deal. Plus, the main part of that is what Powell was saying on Friday with regards, you know, we're not in an interest rate hiking mode, and that allows the equity markets, a lot of investment in the equity markets, and sees them rally. As I said, here's the dollar, US dollar, just trading sideways. Of course, it looks like it's just drifting lower, but this is on the hourly charts. On the bigger time frames, it's still overall, to me, still going up. The mover here, this has been on the day as well, dollar China, right? The offshore yuan is falling, which means China is rallying. And this is the euphoria over the whole potential deal coming through from the US and China, right? So that's the main thing that's moving the markets just in the Asian session. There's not a hell of a lot going on, obviously, on a Monday. There's no major economic numbers coming out. And then once we come back down here and look at the board, there's not a huge amount to get excited about. If anything, I think the German industrial orders and retail sales figures may give us a bit of a lead into Euro. But to me, I'm waiting for a little bit more decisive action or clearer action on the actual charts themselves to get some sort of trading. I want my charts to tell me what to trade. At the moment, they're not telling me much at all. Now, if I just come back in and have a look at the MyFX Trading Hub, I've just started to update the components here. We are going to be rolling out a few extra features, which we hopefully will add very shortly. But the main parts at the moment is the markets are at full liquidity now. So the chance of another glitch like we saw last week with the yen and then that follow-through effect on the equities and everything else, that's probably less likely now with the markets back to full liquidity. We do have a new list of upcoming releases this week. You'll see all the major events, those traders in the funded trader program. Just be aware which currency pairs you need to be square for on these events. Now, the main part, Bank of Canada, this is going to be a key thing on Wednesday. Wednesday is really the major start of the week. We've got a huge amount of data coming out. We've got it's a big sort of central bank day. We've got the Bank of Canada, Carney speaking. We've got the FOMC meeting minutes rolling out of that as well. And there's also a bunch of Fed officials, Bullard and a whole other bunch of cronies, I should say, speaking. But then we get into the Chinese numbers later in the week and the ECB minutes. So this week is a real connection, okay? It's where the markets really start for the year for most traders. And what we want to see is, it's good to see the ISM non-manufacturing numbers. We want to see what's really going on behind the scenes with the US dollar. And with those moves last week, that's why we need to wait a couple of days, give the markets, give the traders some time to wait and see what's actually happening out there. Now, as far as the major currency pair outlook, to me, with all, I know there's a lot of noise in the media about what's going on. To me, there's not much really going on. Dollar yen, yeah, of course, it has broken down, so it's got a little bit of a downward bias, as does dollar CAD. But dollar CAD on the short term, yeah, it's come up a couple hundred points. In the medium term, it's pretty much still sideways until it breaks down through sort of 133, sort of 50, where it is at the moment. You know, it's got a bearish sentiment, but it's just more of a repositioning of the market. The market was very long dollar CAD, obviously, with oil falling. Now that oil's rallied back, that's to me, that's the main catalyst for dollar CAD, and it does give it a mildly bearish picture. But if you come back and look at the rest of these currency pairs here, there's you'll see most of them are just sideways. All right, like euro, sterling, Aussie, Kiwi, dollar Swiss. you know, the sentiment short-term and long-term is very mixed, and that's why I've got that sentiment there. Now, once again, for those traders new to T4T, if you're looking to get a bit more of an idea of what's going on here, just click on the either the currency or the icon itself, and you'll get the detailed page up of the analysis. Just my internet's a little bit slow at the moment, so that's just coming up. But that's what you can look for. Now, as I said, as we get into the next best trade watch list, we are going to be probably looking mainly towards, you know, really Wednesday to get an idea of what's going on, and that's where you'll see the bigger picture come into play. So, like dollar yen, as I said, current technicals sort of mildly bearish. You know, that move down on the charts on last week, you know, it's been, I think it's more of a glitch. Now, when you come back, and let me just come back to those charts, you're looking at the overall aspect here on dollar yen. Now, the way it sort of bounced back, to me, it tells me this was, if it was a genuine move, it would do this, it would bounce back and then be down here somewhere. But as it is, it's corrected itself pretty much straight away, and it's coming back to exactly sort of pretty much where it was, around that 108.80. We're not far off that, and actually it pretty much was just below that in yesterday's trading. So there we go. I think to start the year, we've had this little glitch, low liquidity. On your hourly charts, the majors don't make a hell of a lot of sense. If anything, dollar CAD is the one pair that's really showing some signs of fundamentals and technicals sort of matching up, even though those technical levels aren't that great. And it's come a long way from 136 to 133 in thin liquidity conditions. So we need more data to sort of work out what's going on. But oil at $48, that's the only real thing in the whole market that I can see that's actually quite tangible that you can hang on to. And that's pretty much it, guys. There's, as I said, we're going to have loads of updates coming out, and hopefully in the coming week or so. Get you guys really tuned up, especially focusing on traders who are looking at in the funded trader program themselves and taking them through the online components. I'll be doing a few special webinars, probably the start of next week, and get everyone really tuned up to with the updates we're making and where the best potential opportunities are. All right, guys, that's it from me. As I said, you can reach us on the full support. We'll be back online now. You can get us in the trade zone. If you are trading, jump online there, ask some questions. If you have any questions about trading or anything else, I mean, all the traders that are connected online will be happy to help you as much as we will as well. And for those traders having a few IT issues, we did change the main back-end system at the end of last year, so there is a few little bugs in there. If you're having a few issues, jump on IT support and give us a shout there as well. All right, and that's pretty much it, guys. Good to be back. I'm looking forward to tapping into the markets. I'm looking forward to Brexit, that Brexit final decision. I think it's on the 21st of January. I can't wait for that to be over. And then sterling really does come back into play. All right, guys, that's it from me. I look forward to, seeing you in the trade zone. All the very best. Cheerio.